Alright, hey everybody, this is Julian Marchese. Just gonna make a little video today to update you guys on the project we're doing and what's to come in the future. We are gonna take a little break from the liquidity provider project just because we're going into the December month. Volume is going to start declining, volatility is going to start declining, and uh, because of this, it's going to be much harder to scalp the market, especially in the last hour when usually not as many people are trading. Um, so we're going to take a little break from the liquidity provider project, and if we do choose to redo it again, I'll make sure to post another video uh, telling you guys that we're restarting the project. So now what I'm going to do is I'm going to go over a few markets with you guys through our auction market theory lens. Remember, that's my main base of trading, and that's the one I trade live money on. And we'll just go over the the four indexes and what I see in them, and we'll also go over some other commodities, some other futures contracts, and so forth. So let's just go to a daily indices just to see what the four major stock markets are doing. We have the S&P here, the Dow over here, the Nasdaq down here, and the Russell over here. Now you can see this red line in the Russell was the high in April, which we have now breached and are trading above. So it looks like the Russell is definitely leading this market. As you can see, the S&P has only popped its head above its November high, and the YM and the Nasdaq have not even touched their high yet, while the Russell is leading. So the Russell is going to be something to watch next week for potential spreading trades and for potential opportunity and divergences between the other three indexes. If we look at the German stock market and the Euro stocks, you can see the Euro stocks is definitely lagging. However, we are coming back into this balance, and we'll see what happens. It should get interesting. Right around the 2850 mark to the 2825 area. That could be an interesting area. That is the high volume node of this balance area, so we'll see what happens over there. And the German DAX market is sort of looking like the Russell here, breaking out to new highs, and we're approaching that psychological 7,000 number. So going back to our main page over here, let's look at a market profile chart of the S&P 500 futures. So we're just going to zoom in over here. We'll go over this last 3-day move we've been having. So you can see on December the 1st we had this nice push up in the B period. We gapped higher, and in the BC period we had a nice rally up to new highs as we breached these 1125 highs. Then during the F period we had another push up, and then for the rest of the day we just went back and forth, up and down. Just we found value, and then as you can see, during the next day we opened in that value area and just rallied straight out of it. Beautiful trend day, transition day, which is what you could also call it. You can see we were pretty much one time frame the whole day. C period held, D period low held, E period low held. We had a little breach of lows over here. The only real level, the real 30-minute period that didn't hold was the L period. However, the M period tested the point of control of the day, then rallied higher. And then on Friday we had a poor jobs number. However, this market seemed to try and find strength. We couldn't break below the 1625s, and you can see we rallied into the close. So what does this mean? Well, we could be entering a period of from this daily chart, we could be entering a period of potential searching for value. So because we have the Russell leading, we could see a push above these highs in the S&P, and we could rally quite a bit further if we do see some more movement in the other indexes as well. So we're pretty much probing into uncharted territory unless you go back a few years, which isn't too valid, but we're going into uncharted territory, and that's going to be interesting to watch to see if when step two of the auction market process evolves. So there are two major, there are four steps of auction market process. The first step is imbalance, so the market is actually looking to go somewhere. The second step is reaching a stopping point. The third step is ranging around that stopping point, so that would be a balance area, which is where we make trades off of. And the fourth step is either a move to retracement or continuation of the move of step one. So you can see here that step one is a move up or down. Step two is a stopping point. Step three is balance, and step four is either a move to efficiency, which would be a breakdown, or a breakout of that balance. So we like to make trades in these areas during step three. That's the area that provides the best reward to risk, and we're looking to profit off of a move from one extreme to the other or a break of the other extreme. Um, an example of that, we'll just do an example, would be of Friday's profile. You can see we had a nice bounce area here. We had an unfair low, unfair high until the end of the day. If you had that upwards bias, and you could see this by the single prints, you could have bought the market at 17, has stop at 14.5, which would be the beginning of the single print. So you got right there a let's see, 2.5 point stop. Let's just draw that in, 2.5 point stop. While your reward would have been probably near these highs, so let's say 23, and that would be a 6 point reward. And you could see that it actually did breach and go higher, so it could have been even more than that. But just visually, you could see the risk to reward right here. That's your risk, and this is your reward. So over time, if you take trades like these, your account will grow no matter what. Um, but you can see this is the auction market process, and we're taking trades in the extremes over here. So uh, what we are looking for is that step two, because we are obviously in vertical development higher. You can see here the last 3 days have been a huge push higher. Now we're going to look for that step two, which is a stopping price, and see if we rotate around here. So either we are going to stop near these highs and rotate around here like so, maybe do a little fake out. If this does occur, I would be definitely weighted to buying the lower end of this range for a breakout higher, because I do believe this market will probe above those highs. Or you could just take an initiative trade if it just starts breaking out right here. You could just buy this market if it breaks above new highs with all the other indexes joining in. If we go on to a 5-minute chart over here of the S&P, this is including overnight data. You could see where this move originated from. Let's just delete all these lines. You can see where this move originated from. We had a nice balance area right over here that offered possibly many opportunities in these lower ends and this upper range. You can see right here, offered many opportunities. And what happens after we have such a large bounce area, which is what we had one for about 2 weeks, when we break out of it, the move is usually significant. And normally it is at least what the range of the bounce area was. So if we calculate that, that was a 30-point range, we should see the 1235s. That's just what we've noticed from the past. So it's very likely we could come and see the 1235s in the ES. And around that area, we possibly could see a stopping price being formed. But until then, you would have to be initiative to the upside in this market. Let's just go ahead and look at the oil market. We'll just, stay on that chart over here, and we'll Just type in oil symbol. So you can see oil is reaching that psychological $90 level, and it is in sort of the same situation as the S&P. However, it does appear to be a little stronger. You can see this area of balance created a large move out of it, especially this minor one that formed inside the bigger area. And you can see there were many opportunities to take hold of this move up, but we are breaking new year highs, and we are also in uncharted territory. So it appears all these markets seem to be uh, vertical to the upside. So we'll look for a stopping price once again to best decide whether to take a trade or not. And until step 2 does arise, there are really no trades in these markets that are just rallying relentlessly. So if we look at the gold market, you can see the gold market is a little more interesting. However, we are rallying to near uh, all-time highs in the gold market, which is in the $1,420 mark. Uh, we after the jobs report, you can see on this huge volume, we did have a huge move out of this area, and it is most likely we will test the 142 area. However, the last test we had of this area was a large rejection, so we could have quite a good trade location if we do get into this area. I would be expecting something around the lines of this market doing one of these numbers. As we get into the 1420 and around half, this is around new highs, this red line. We could see this market just start to do one of these. Uh, you know, make a nice bounce area over here with two obvious extremes. We have a lower extreme, then we'd have a higher extreme. Because of the upwards direction and the vertical conviction over here, you might want to be trying to take a long trade over here with very small stop and a large reward if this market breaks up. However, if we do start to see signs, if we do start to see this bounce area form like this, and then we see a breakdown and then a pullback back into it and another bounce area, that would be my first signal that maybe we could be pulling back and short this upper extreme of the minor bounce area and the high volume area of that bounce. So we would need a breakdown first before I do believe this market could be reversing. And last but not least, let's just look at the euro and see what it's doing. You can see it's the weakest of all the contracts we've looked at so far. We are trying to make either a pullback or start new vertical conviction to the upside. Depending on what time frame we're looking at it, you could already say this is vertical conviction to the upside, just from all this movement off of the jobs report. However, if you look back on a 30-minute chart, the main trend is down, and right now I'd be looking for areas to potentially short this market. And on the daily, the last area I think could be an area of interest appears to be the 136s, which is where we broke down from previously. You can see this on the bar chart. That was a nice bounce area we had before, so we broke out of that, started a huge downtrend. So gold, oil, and the stock markets appear to be trying to rally higher, while the euro is a little weaker. And as we all know, currencies is what drives all the other markets. So pay attention to the euro; it could get interesting. We'll see what happens with those. But it looks like next week could get a little interesting, even though we're getting into the December month with all these contracts near either highs or important key reference areas. So we'll see what happens this week. Good trading to all of you.